strength that's buzzing in trade on the back of a good set of Q2 earnings, which saw a jump up of almost 20% on a year-on-year basis in top line and a significant expansion in its margins. My colleague Snehi is now joining us with the breakdown of the numbers. Over to you, Snehi.
Well, yes, good set of numbers coming in from Lenskart for the second quarter. Let's break down these numbers on the consolidated year-on-year basis. The revenue has gone up 21% on a year-on-year basis. Net profit also healthy growth of 19.5%. The EBITDA is also up 45% year-on-year. What looks really good is the EBITDA margin expansion that's come in at 19.8% compared to 16.5% on a year-on-year basis. If you take a look at some of their Q2 highlights, the India revenue is up 13%, international revenue is up about 34%. So both these segments have performed well in tandem. The other segments that they operate in, like eye tests, 56 lakh eye tests have been performed in the second quarter, which is an uptick of about 44% on a year-on-year basis. 83 lakh eyewear units have been sold, which is up 20% on a year-on-year basis as well. What looks really healthy is their Q2 and H1 same-store sales growth that has come in at an even 15% for the company. So this looks very healthy. They've added 143 net stores in the second quarter. The total is now at 2,270, and out of this 2,270 are the India stores, 679 are the international stores. Even if you break down the stores, metros have 970, tier 1 stores are 509, and tier 2 stores are 791. So they have said in their con call as well, and in their letter to shareholders, they've said that the tier 2 stores are doing very well, and in fact they're being more profitable than the tier 1 and the metro stores right now. So that is looking good. GST led revisions has pushed the demand to the third quarter, and on the back of that they have seen a very good start to the third quarter. October has been very good for them. They are going to be launching B, which is an AI-powered camera smart glasses in Q4. It can do health monitoring, UPI payments, photo and video capture, translation, and many more new things. So this Q4 launch is going to be key to watch out for. They're targeting 450 net store additions in India in FY26. They're right in the middle at the 225 mark now, so well on track to achieve this store guidance. Lastly, let's take a look at some of the brokerage reactions. Remember, weeks ago, Ambit had initiated a sell rating with a target price of 337. Soon after that, Jefferies had initiated a buy with a target price of 500 rupees per share. Even after these Q2 earnings, Jefferies continues to maintain that buy rating with an unchanged price of 500 per share. So that's the take on Lenskart's second quarter's numbers. Good set of numbers coming in.
Good set of numbers, and the stock is still up 7% after the kind of fall that we've seen in the market. But Snehi, stay on with us because Quality Walls India will be included in the Nifty 50 Index from December 5 after HUL demerger. Tell us what does this actually mean for the index?
Well, so if you take a look at how traditionally Nifty companies have seen their parts demerge and then list on the exchanges very temporarily, list in the Nifty. That has been the case with ITC when ITC hotels demerge. That has been the case with some more companies as well when they have had arms of theirs demerge, like Reliance and Jio Financial. When that demerger happened, this was also a temporary adjustment that these stocks followed, and that is the same mechanism that is going to be applied to Quality Walls India as well. So what is this mechanism that we're talking about? Let's understand. KWIL, which is Quality Walls India, is going to be demerged from HUL on the 5th of December. Now when this happens, it is going to temporarily be a part of Nifty 50 at a constant price for a short while till the price discovery happens. Now what happens on the 5th of December when this demerger happens? A special pre-open session will be conducted by the NSE from 9 to 9:45 a.m., something we saw for Tata Tech as well. Nifty will be represented by 51 securities only for the time being. KWIL will be included in the Nifty with a dummy symbol and at zero price. So what comes next? As per NSE norms, the demerged entity will be removed from the index at the end of the third day of its listing, which in this case, because it is going to be the weekend, it's going to come up to December 10, 3 trading sessions. In case the stock hits the price band on the first 2 days, the exclusion date is going to be deferred by another 3 days. But if this happens again, then the deferral will not be pushed on any further. Just to give you a little bit of context, HUL has very recently received the NCLT nod for the demerger of its ice cream business. Quality Walls holds brands like Cornetto, and HUL shareholders on 5th December are going to be receiving these KWIL shares in the 1:1 shareholding that they already have in the existing HUL shares. So that is going to be an important metric to watch out for, how the stock demerges, what the price discovery is in the special trading session. All of these are going to be very keenly watched out for on Friday, the 5th of December.
Right, Quality Walls that is demerged from HUL will be as a part of Nifty 50 going on from 5th of December, that is Friday. But